Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. Today is May 1st, Wednesday, May 1st, and we are now officially in the last hour of the trading day, the hour that I think gives you the most confirmation on what to do with your positions. I generally don't like to enter any of my trades until I see the confirmation at the very end of the trading day. So anyway, interesting day in the market today. The format of today's show. First of all, we're going to run the legal disclaimer. Second, we're going to take a look at the major averages and see if there's anything interesting going on with them. Then we're going to look at my current positions, where we got in, why we got in, and how we're going to manage the positions from here on out. And then after that, we are going to turn to my watch list. We're going to go through the stocks on my watch list, analyze, and see if we can find something interesting to enter at the end of the day. And then after the market closes, if there's any questions, I will do my best to give you my best opinion on whatever questions that you have, or if you want me to take a look at any symbols and give you my opinion on that as well. So that being said, let's go ahead and run the legal disclaimer. It's about 40 seconds. I will be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, thanks for holding with me through that. So currently, the Dow Jones is down 6 points, the NASDAQ is up 18, and the S&P is down 3. We were up much higher earlier in the day, but the Fed did come out today and talk about interest rates, not cutting them, not raising them, and the market kind of sold off when that happened. So let's take a quick look at the major indexes, and we shall see if there's anything interesting for us. You can see here on the Dow, we gapped up, we tried to go up a little further, and we reversed. So it's never a good sign when the close is below the opening. So let's keep that in mind in the bigger picture when we're looking for setups today. The Qs, you can see, did gap up, attempted to get above the third ATR channel, reversed on that, and we're to 71 RSI. So still pretty toppy in here, and I do not like the price action of the price now being below the close, especially on a gap. The S&P, same thing, did gap up to a new high and now has steadily reversed. The IWM, which is the Russell 2000, did not gap up to a new high, but it did gap up inside bar. But as you can see, majority of the indexes are negative now. So yeah, now the Dow's down. Now the Dow's down 40 points. So not so positive, really. I think that the market was waiting to hear from the Fed, and a lot of times when that finally comes out to the public, the market reacts one way or the other. And on this day, it's been a little bit on the negative side. So let's go ahead now and take a look at current positions. Okay, so I entered Etsy here on the 25th of April when we had this nice big strong bar above the 50-day moving average, and we took out this previous range. It did move sideways the next day, went up nicely the day after that. We did phase out of two profit targets there. It reversed yesterday. I was really on the bubble as far as whether or not I wanted to hold this going into today, but I did decide to go ahead and hold it, and we did. You can see here today we did hit one profit target to the upside near the high before it reversed. Whether or not I'm going to hold this now, you can see our entry point was right here, slightly underwater on the trade, but we did hit two profit targets here, so it's very close to a break-even trade. But I was expecting to see, or I wanted to see, some kind of move, sustainable move back up, which it didn't do. We're just going to have to come back and see where this closes at the end of the day. A close below this 5-day would be a possibility to take it. Also, waiting for a close below the 50 might also be an option. So pretty much a break-even trade all in all. But we don't want to let this turn into a big losing trade. So currently it's down 8 cents. It was up nicely, so we'll just have to watch this at the end of the day. Intel, this was a frustrating one. I bought this here on the 29th of April when we had the convergence of a very low RSI, but still above 30. I think it was 30.25 or 30.5. At the same time, we got to the 100-day moving average. That's always a good double confirmation for a trade, is when you have a low 30 RSI level, because there are buyers that come in at those levels, and then also having that come to a point right at the same time that it got to the 100-day moving average. So, there's going to be some buyers at that moving average. There's going to be some buyers at the 30 RSI. And that's where we were hoping that it would stop. And pretty much where it did stop, it tried to rally a little bit yesterday, came back. Today, see this line here, the 5160? That's exactly where I had my limit order in. And it's exactly where it got to, but it did not fill. So that's frustrating. It happens. It would have been nice to take, at least 12% off here at the high of the day, but it got right to the limit, but didn't actually fill my shares. So right now, it's a little precarious. We're at 30.21 RSI. So I will be closing out of this today if we close below 30. If it holds above 30, I will hold it. So, we're pretty much close to pretty much a break-even trade at this point. And I guess on the bright side, it did hold where we thought it was going to hold. So we'll see what happens. We'll see what happens with Intel at the end of the day. Merck. I did buy Merck yesterday. Actually, also bought it here when we tested this 200. And then I sold it here. It was a nice 2% gain just for a couple days. Then I got out of it. I waited for something else to take shape. And when you come from a deep dip buy down here and you start getting into this 50 RSI range, one of two things are going to happen. Three things. One, it's going to reject the 50, go back down. Another, it's going to just continue to move sideways. But yesterday, this was after the earnings, it did go down and then reverse strongly, given the momentum to the upside. So we did enter yesterday Merck at 78.66. You can see I did hit one of my profit targets today, which is nice. As far as, as it is right now, we're going to keep it. But, if it were to close below the 100-day, the 5-day, somewhere in there, I would exit the trade. It was much higher. It's come back, but it's fine. It's important if the current bar's day is higher than the previous bar's day. That's always a good sign, right? That's always a good sign. So we're going to keep this. If it moves up above the 50-day moving average and then closes back below it, that'll probably be a reason for me to get out as a trailing stop. But as it is here, we did hit one profit target. We took the trade because we had this, it is tempted to go back down at a critical area and then reverse back up strongly on strong volume. And then the MACD also went positive as well. So currently right now it is a hold, and glad that I got out at one profit target. SPY. Okay, so as many of you know, I do like to buy the SPY every night at the close. I'll just run through this real quick. But if since 1993, if you would have bought the SPY on the open, so bought it in the morning, sold it on the close in the afternoon, you actually would have lost 5.2% from 1993. But if you did the opposite and you bought on the close and sold the next morning, so you buy in the afternoon, sell first thing in the morning, you'd have actually returned 568%, meaning that more than all performance came in after hours trading. And you can see the difference here. The red line is buying in the morning, selling in the evening. The green line is buying in the afternoon, and selling first thing in the morning. And you can see there's a big difference. And although it has been it has moved up nicely, there certainly are drawdowns with this. So it's important that you take a small position size if if you're going to attempt to do this. So it has worked out very well for me so far. It's been about 44 days, I believe. And you can see here, I did buy it yesterday at 294.07 and sold first thing in the morning and got 294.71. So I always buy an even 100 shares of SPY, so it was about a $71, $72 profit overnight. So I will be buying this again at the close of the market. Okay, VIX. I bought VIX back here when we had a V1, V2 entry, and a V2 entry is where it consists of 3 bars: day 1, day 2, day 3. Day 1 or day 2's bar has to go below day 1's bar, and then day 3 bars has to close back above day 1's close. And in addition to that, we also, when this V2 happened, you see how we were below the third ATR channel, which is this big thick line? We closed back above. The next day moved strongly in my favor. I phased out of about 30% of the trade. Then it came back down. Yesterday, I did hit 2 profit targets again to the upside. So even though you can see the dotted line is where I bought it, even though it seems to be a break even, it's been a nice profitable trade because of my phasing out. And earlier it was down, now it's up. So I think this is going to be an interesting day, but I'm going to keep this until we either have a close below this low or a close below the 30 RSI. Okay, XTN, which is transportation. I did buy this yesterday. We were in this nice uptrend and we pulled back into value. I consider value in between the 1 ATR and the -1 ATR lines, making this channel. We did sell off strongly, but we moved sideways. We attempted to go down, probably set off these stop losses here and immediately reversed. So this is a V1. This is when this bar, this takes out this low and closes above the previous day's close. So I did enter there. My initial stop was the 20-day, which is the blue line. And if it closes here today, underneath this 200, I will go ahead and just take the loss on this trade. So that's basically it. So Etsy, we're just going to have to see. My gut is telling me that a close below this 50 is probably my stop at the end of the day. So if this closes above the 50-day, I'm going to keep this. Intel, if it closes under a 30.45 RSI, I will get rid of it. Otherwise, I will keep it. Merck is fine. My initial stop here is going to be the 100-day or the 5-day right in here, or close below the halfway of this bar. SPY, we are going to buy this, or I'm going to buy this again at the end of the day. VIX, a close below the 30 RSI will be my stop. And if it continues to move up, I'll just continue to phase. And XTN, close below the 20-day, I will also sell that. So those are our current positions. And now let's turn to the watch list and see if there's anything for us to take a look at today. Starting off with Apple. Apple is the big winner of the day. Had good earnings. As you can see, nice big move up. It's a 74.26 RSI. You know, this could go up to 230. This could go back up to the previous high, but for me, the only possible way I could buy this would be if I bought it here and use the bottom of the gap up day as my stop. But this is a pretty big distance, and you know, I like to get into trades that have at minimum of a 2-to-1 risk reward ratio. So if this is my risk from here to here, I would have to have double that up here. So you know, I'd have to at least have the possibility of going to 230. I think that's the previous high. It could, but I'm just going to let it go. I'm just not in a habit of buying these breakouts at these high levels. The 6 ATR channel up here, very likely to give it some resistance also. So if we came back down, closed halfway of this bar, closed back closer to this bar, I may be interested in getting in because it would give me a better risk to reward ratio. You know, if I get in here, my risk is half. So, you know, maybe up here is my profit. So I'm just going to have to let this one go. I'm really happy for anybody that has Apple. I do have a friend of mine that has a large position in Apple, and he had a wonderful day today. So I'm happy for him. Okay. Amgen lost the 200-day. It's moved down. It attempted a rally. Now it's made a lower low. It's at a 32.55 RSI, which is somewhat interesting, but there really no other supporting indicators on this chart other than, I guess, it did come down below the third ATR channel and rally back. But yeah, I just it's not very strong. I think this has a while to work itself out before there's some stability here. Amazon. Well, Amazon did gap up on earnings. It's moved back down. See how it rejected at the third ATR channel there. So in order for me to get interested in Amazon, I would probably have to have a pullback somewhere here back into value. So I'm not interested in Amazon here. Boeing is just moving sidewards. In order for me to get interested in Boeing, you know, here we have a convergence of the 100-day moving average. At the same time, we have the 1 ATR channel. So a move back down to here, close below, close back above, that could be interesting. To the upside, possibly a breakout over this previous high, but right now it's just really moving sideways. Woo, Alibaba had a beautiful day. I have a friend that's in that, so he has had a good day on there. It did break out over this range. It's a 62.74 RSI. Let me take a look here. Yeah, that's right, Bruce. Go send something by FedEx. Let's get the transports up. You know, this is a tough one. I mean, it did take out this previous high. It's 62.84, so it's not incredibly overbought. But we do have the third ATR channel up here. MACD did go positive. I think what I'm going to have to do on this one, I think I'm just going to have to wait and see if we can get a pullback somewhere into this range. You know, I know you see something going up and you don't want to miss out on it, and you get all that FOMO, fear of missing out, but just experience tells me that it's not to chase. And not that you're chasing here, it's just that you have the third ATR channel so close here, and the tendency is when stocks get up, you know, their prices get up into this third ATR range, there's a tendency to stall out there. So to get a better risk to reward ratio right here, I would have to wait for it to come back down and get a better price. Caterpillar. We did bounce off nicely off of the 50-day. We've just been moving sidewards here. You see how this high and this high and this high and this high are lower than this peak here. So if this were to break out above this line here in the coming days, that would be considered a fractal, and it would be a fractal that's inside the channel where things are not too overbought. I would consider that. So right now, a close back below the 50 or back above the 50 or a break over this fractal is what would get me interested in Caterpillar. Canopy Growth did lose the 70 RSI. In order for me to get interested in Canopy Growth, I would have to come back down somewhere down into where the 20-day moving average is at the very least. Oh, just give me 1 second and I will be right back. Okay. Okay, so Dow Jones, we talked about that. It looks like it's still, the close is still below the opening, so no real interest here. Dexcom, we did sell Dexcom yesterday. I did buy Dexcom here. When we had this V1, this bar went lower than this low, then closed above the high. And at the same time, we made this low, we rallied, we made a lower low, but the MACD lines, instead of being red and deeper red because it's a lower low, it didn't even paint any red. So that is called a bullish divergence. That's when you have a bottom, a rally, a equal to or lower low while you have this divergence. So we had the V1, we had the divergence, and we also apologize. And we also see this previous range. We broke to the downside into a new range, reversed back up. So we had a V1 entry, we had a false breakout to the downside, we had a double bottom with a positive divergence. I entered here, and we phased all the way out to here, and I exited the position here. And good thing we did, because it's down another 2% today. So that was a nice trade. At one point that was up in the 10% range on that particular trade. Okay, so eBay. eBay has just held its gap ever since it went up on earnings, so there's nothing interesting there. Etsy we talked about that, so looks like I'm going to use a close below the 50-day for my stop on this trade. So I've got about 80%. We bought it here, phased out 20%. I have about 80% left on this trade. Facebook gapped up on earnings, closed below, hasn't been able to take out that high, kind of been range bound. So in order for me to get interested in Facebook, I would have to have a move most likely back down here to value to the 20-day moving average. Five Below finally lost its 70 RSI reading, and you know, people that were in this trade while it was holding above 70, you know, if you're in a trade and it's holding above 70, you're probably better off keeping it. But when it does lose the 70 RSI reading, that's a good place to lock in profits. And it looks like everyone was on the same page with that strategy here. A close back into the value zone here would be a good dip buying opportunity, because, you know, people that missed out on this move up, they're waiting for some reason, or they're waiting for some kind of pullback to get in at a lower level. So if it does come back into this area, there will be buyers waiting. So I think in some place in this area would be a good place to possibly take another position in Five Below to the upside. The Swiss franc moved down, moved sideways, had a big gap up today, but after the Fed announcement about not cutting interest rates, it did sell off. So nothing interesting there, but anytime you have a close below the open, you know, it's generally a bear sign. Doesn't mean it's going to go crashing down, but it's just a little bit of a red flag. General Electric. We did buy General Electric here 3 days ago. We had this low here, but this low is higher than this low. Two tests of the 100-day moving average, and then we broke back over this range here. So we knew earnings were going to be Monday morning, so it was a one-day trade from here to here, but it was a good trade for one day, right? So no interest here where it's at. It's it would either have to get above the 200 or come back and pull back. Well, it looks like the market is moving down now, certainly. Gold, same thing as with the Swiss franc. It did rally before the Fed announcement, and now it's come back down. So Google, boy, this is interesting on Google. I considered buying this when it tested the 50 and closed back above, but what I really want to see is I want to see the price close below the 50-day and then close back above the 50-day. Let me see if I have this here. So this is the back test on Google using the 50-day simple moving average with a close below and close back above. And you can see buy and hold was 1,165.9% gain, using just the stay in the position over 50, stay out of the position under 50 was 754%. So still a really nice gain, but the drawdown using the 50-day as your line was only 28.4%, while the drawdown on the SPY was 65%. So more than double. You can see since 2009, using 2000, the 50-day moving average as your line in the sand is a good, solid, back-tested approach to using a moving average. So with that said, if it closed back above the 50 tomorrow, I would buy it. But if it doesn't, I'm going to turn my attention to the 100-day. So if we can get down here, get a low RSI reading of possibly 30, at the same time it's down in this range, that would be an excellent time and provide a good risk to reward ratio. So nothing on Google. This was the day before earnings, day after earnings. So good example of not buying and trying to hold through earnings. Goldman Sachs, really no interest here. Possibly a dip back down to the 50 would be the most likely entry point for me. Or if we move down nice and orderly, move sideways, stab to the downside and reversed. Okay, so HCA, we sold off here when we had the Bernie thing going on. We rallied, we moved sideways, we had earnings. Earnings were sold into, closed lower than the opening, 46.63 on the RSI. So it looks like right now we've lost the 50 RSI. In order for me to get interested in this again, I would either have to break above the 200-day moving average here in the future, or come back down, test this bottom. But if we were able to come back down and test this bottom, most likely we would have, in addition to a double bottom, we would have a bullish divergence, which is positive. Because if the bars got down to this low here, just from experience, I can see that the red bars would not be as low as this. So anyway, this is something that might work its way out in a week or 2 weeks, but nothing today. IBB is NASDAQ, biotechnology. In order for me to get interested in this, at the very least, I would have to have a reading of 30 to the downside, and or a close back above the 200, or the 5-day moving average, which is this little line here, closing above the 20. But where it's at right now is just in no man's land. Intel we have. We're almost exactly where we bought it. We're looking our stop here is going to be a close below 30-day, the 30 RSI. So, if it does close below the 30, we're going to have a small loss, and that's key. Always try to try to place your trade very close to where your stop's going to be. So if it closes on the other side of that stop, you're wrong small. But if you were right, you're right big. That's the key to profitable trading, is keeping your losses small and letting your winners run. But trying to enter a trade where you know there's going to be buyers, whether it's a moving average or RSI, and then if you're wrong, immediately getting out. And if you're right, having the guts to hold it while it's moving up. Okay, where are we at now? The Russell, yeah, just moving on down. It looks like the market's selling off here a little bit now. Now all the indices are red. So Johnson & Johnson, 65.75 RSI. This has just kind of been a big hot mess in here, really choppy, but I'm not interested in buying it here at that high RSI level. Coca-Cola had a big day up yesterday, and now it's given some of that back. We did buy Coca-Cola back here on the 9th of April when it closed above the 50-day moving average, which is this gray line, and then also closed above the previous range of these bars. And then we also went down below the 200-day moving average several times, so that gave me a good indication that it tested this, did not want to go down any further. We did buy it here, and we got out here and phased out the entire way up. But the reason we got out was because earnings were coming, and it was positive earnings, but you don't know that in advance. So this was a nice trade, nice phase out, followed the rules, got out when we were supposed to, and a positive trade. Okay, what do we have now? So Lockheed Martin, we actually got in this as well when we closed below the 200, back over the 200. We stayed in it about 5 days from here to here, phased out the entire way. Then earnings came out, gapped up, and it's moved sideways since then. MasterCard did have earnings yesterday. Had a nice breakout, but right now it's looking a bit like a reversal. It's a 70.82 or 63 RSI. If I were long this stock, if it closed below the 70, that would be my exit point. 3M, another example of buying through earnings. Oh, just give me 1 second, please. Okay. Yeah, so, this is another example of what can happen if you hold through earnings if it does not go your way. I mean, we did drop 14% or something. We've moved sideways, and now it looks like we're dropping a little bit lower. So it's a 23 RSI. At the very least, for me to get interested in 3M, I would have to have a close back above the 30. So not anything right now. Altria, which is the American Philip Morris. I'm looking for a close back above this 200 for an entry point. They had one of their devices approved by the FDA yesterday, which I think is going to be good in the future for their business. But if you have an idea or you have a theory about a thesis about trading a stock or a certain company or so forth, if you like the fundamentals, wait until you get triggered into technically if you want to go long that stock. So it's always nice when you have good fundamentals and the technicals are also showing that it's going in the direction that you want it to. So a close back above the 200-day here, I would be interested in buying Philip Morris or Altria. It used to be Philip Morris. For years, it was Philip Morris, and then they changed it. So I always mix those up. So Merck, we bought this when we had this nice break above all the moving averages out of this sideways movement. MACD went positive. RSI went over 50. Did hit one profit target today. So my trailing stop at this point would be a close below the 100-day moving average. Microsoft looks like it's in danger of losing the 30 RS or the 70 RSI as well. We are now lower than the low of the gap up day, which is not super bullish. In order for me to take a possible look at getting back into Microsoft, at the very, very least, the 10-day moving average, which kind of coincides with the high of before the gap up day, or a deeper dip down here, I think would be better as well. Netflix did have that nice move up, sold off a little bit, moved sideways. What I was really looking for, instead of this bar going up, I was looking for this bar to go down, get rejected, come back up, form a V1 or a V2. But it did not accommodate today, and it's had a nice day. So anyone that has Netflix, awesome. In order for me to get interested in Netflix again, I would probably have to have some kind of pullback here to the 50-day moving average. Nike, we did buy Nike back on the 12th of April when we broke above this prior fractal. Fractal has 2 lower highs to the left, 2 lower highs to the right, and this particular day did take out that fractal. In addition, MACD went positive. It was on strong volume. We were above all the major moving averages. So that was a good trade, and it went right on up for us. We phased out all the way to here. We did exit here because on the final day, the RSI was above 70, and then it closed below 70. And you can see that really was the time to buy, to sell it. So that was a great trade. Right now, in order for me to get interested in Nike again, I would have to look for, this bar is larger than 1 ATR. See, this distance to here is 1 ATR, this distance to here. This is larger than 1 ATR. It's close to 2 ATRs. So I would need to see this stop going down, starting to move sidewards, having the bars narrow, meaning that they're not so high, and then a good close below the 50 and close back above would be an excellent risk to reward ratio on Nike. So we'll watch that in the future, but not for today. Philip Morris did have that big bar up yesterday. We've sold, we've come down today. Looks like we're holding halfway of the big up bar, which is positive. MACD went positive, and this is important too. Do you see how we had this big strong day up, and you see the volume on the big strong day up? Well, today we've sold off, but we've held halfway of that bar, but you see the volume is low. So there was a lot of buying on the upside and not so much selling on the downside. So that's a good way to look at volume. You know, if something comes down, is it coming down on strong volume or is it coming down on lighter volume? For instance, if something keeps moving up, but it's moving up and up and up on lower and lower volume, that's a bearish situation. If you're moving down, but the volume keeps getting less and less and less as it starts going down, that is a bullish kind of a situation. You don't buy it just based on that, but it's just one other indicator to look at to help you, put together, make your final decision. But again, big strong up day on big volume is positive. We've come back down to about halfway. It's good that it's holding halfway and it's come back on lower volume. So to me, that seems positive. I do like MO Altria better than Philip Morris because this 200-day moving average gives me a better line in the sand. Okay. So let's move on to PayPal. PayPal rejected that third ATR channel. It's lost a 70 RSI. I would need something down in here. Q's, again, gapped up, reversed. That's not very positive, and it looks like it's losing the 70 RSI. Silver, I might get interested in silver if we can get closer to the 30 RSI, giving me a better risk to reward ratio. It did bounce off the third ATR channel, which is good, but a close below the 30 and back over 30 would be ideal. The SPY, we bought it here yesterday. We sold it here for a nice little profit, and today, and now it's closed much lower than the open, so we will be buying that at the end of the day. I would buy Square here I like this formation where you have the higher low. Now you've broken back above the 200-day. MACD has gone positive. Unfortunately, we have earnings this afternoon. So, if this gaps up not too high, that would be a possible entry for me tomorrow. But we don't know what the earnings are going to be. It could go down here tomorrow. Or this afternoon. We have no idea. But if there were not earnings, this is a good example of a nice trade where you have a low, you have a rally, you come down, but you make a higher low, and then you move up nicely above the 200, and then using the 200 as your stop. But because there's earnings, it's no go today. We have to wait to earnings. AT&T down a little bit today. I did try to buy AT&T here, but it closed 1 penny below the 200-day. If it had not closed below the 200-day, I would have kept it with a stop below the 200-day, and it would have worked out nicely. But sometimes that's how it goes. Sometimes you miss a trade just by a penny or two, and there's really nothing you can do about it. This is an interesting one. It's bonds. We actually got into bonds here. We scaled out of 20% here, but then we got whipsawed the next day. We had to get out of the trade. Now we have a fractal, 2 lower highs to the left, 2 lower highs to the right. It did trigger intraday, but now it is actually lower than where the fractal is. It's a 55 RSI. MACD went positive. I would consider getting back in this again at the end of the day, so we'll watch that. Tesla, yeah, it just keeps on moving down there. It's a 30.73 RSI. It would be legitimate to buy here with using a close below the 30 as your stop, but I don't like it because it's under the third ATR channel. And what my trading partner pointed out to me was that Tesla has been able to hold its third ATR channel for a long time. See here, it had support, had support, had support. Well, now we've lost the third ATR channel to the downside, and so it used to be support. Now it looks like it's going to become resistance to the upside. We don't know that for sure, but there's just not enough for me to buy here on Tesla. Natural gas is moving up nicely. We're 45.59 RSI. We're getting close to the 50 RSI, where it probably is going to have some kind of resistance. But in order for me to get interested in natural gas here, a move back down, a test of the bottom with lower readings of RSI bars compared to here, giving us a double bottom with a divergence would be ideal. But right here, it's kind of an inflection point. It could go either way. So I'd like to see a better setup on natural gas, which would, be another double bottom. United Healthcare came out of oversold back up into that 50 range, but you see it's having trouble with the 50 RSI here. Right here it pegged it. In order for me to get interested in this again, I would have to move back down here, have some kind of higher low V1 to the upside. That's about it. That's about it on UNH. Oil, we did have that big move down. We are inside the value zone, the green bars, the 1 ATR, the negative 1 ATR channel. Possibly if we moved up tomorrow and created a V2, you see how this bar is lower than this. If this bar today closed above here, that would be called a V1. But if tomorrow's price moves up, then closes above this particular close, that would be a really nice higher low V2, which I might be interested in. We'll mark that just in case for the end of the day. But the dollar, ooh. This is interesting because, this was a previous high. This acted as resistance, and we broke back above this. Now we came back down. This particular high here is going to act as support, and you can see it did hold that support, which is that line now. So we've had a nice rally back above. It's a really nice V1. You see how this bar takes out the low here, closes back above. Yeah, we'll go ahead and mark that one. It's above the 1 ATR channel. It's almost to the second ATR channel, which gives me pause. I think I'm going to let that one go. You know, I like to take those V1, V2 trades, ideally within the 1 ATR channels. Now we're at the second ATR channel. We're knocking on the third. So yeah, I'm going to let that one go. I just don't think the risk to reward really lines up that well. Visa, looks like we're losing the 70 RSI, which is probably going to be a sell signal for a lot of people. We'll have to see where that closes, but if I were long here, that is where I would be exiting my trade, with the close below the 70 RSI. The VIX looks like it has rallied. Oh, it looks like I did hit one of my profit targets. Good. So that is good. So I'm out of about 60% of this trade now. So this is moving our way. This is a V1. You see how this low was lower than the previous bar, and now it looks like it's going to close above the prior day's close. So that is a positive signal on the VIX. Verizon got close to that 50 RSI level and got rejected. So that is not bullish at all. Energy really just crashing here. We're at 38.95 RSI. If we got down into this third ATR channel at the same time we had like a 30 RSI, that might be interested. I might be interested in buying that deep dip here, but it'd have to get closer to the 30 RSI to give me a better risk to reward ratio. Consumer staples. This was a good example of price being in a nice uptrend, coming back down into the value zone, looking for a V1 or V2. Well, it did trigger the V2 here. See how day 1, day 2, day 3, here's day 1, day 2 takes out the low of day 1, and then day 3 closes above the close of day 1. But it happened at too high of a level. This was similar to the dollar that we just looked at here. You know, we're about at that second ATR channel, and this is about where it triggered also. We did move up from there, but now we've given most of it back. And a good thing to point out here is, you know, this was the previous resistance. We broke back above it. Now we've lost that previous, it was previous resistance becomes support, but now we've actually lost that. So that's not a good signal as well. Real estate. We did buy real estate here when we had this double confirmation. Indications of a buy was when we closed below the 50, back over 50. Just that by itself is a good signal. And then we had a V2 where this closes below day 1. Day 3 closes above the close of day 1. We did buy here, we phased out up to here, and then when we lost all the moving averages, we got out of the position there. It was a profitable trade, but then the next day immediately reversed on us, which is always kind of frustrating, and then went up again today, but you can see it nailed that 1 ATR channel. So I'm not interested in getting back in XLE right here. Yeah, the Dow is down 122 points now, and Nasdaq's down. So it looks like, to me, it looks like some distribution after these big gains. And then transports, we also have transports. Yep, kangaroo tail. Yeah, for sure. On real estate, right, Bruce? Yeah, on real estate. Kangaroo tail is where you open, you go up, and then you close right back down to where you open. Kind of a reverse cross here. So that's not a bullish sign. Transports, we did buy here when we moved up. We came down, we moved sideways, we stabbed to the downside, reverse, triggered a V1, but my stop here is a close under the 20-day. So if it closes under the 20-day today, that will be it for that trade. But, you know, keep that loss small, right? From here to here. Something just happened there. Boy, it caught up. Okay, well now it's a much bigger loss. All right. All right, so let's see if we have any potentials here for today. Google, I would be looking to buy Google down in this range in the coming days or weeks. That way we would have a 30 RSI range at the same time we're near a major moving average like the 200 or down in this range. So it doesn't look like the 50 is going to hold. So, you know, buyers go on strike. They'll buy up here, they'll buy down here, but they're not, you know, generally they won't buy in this kind of no man's land. So Google is off the table for today. TLT, I would like to see TLT at least close above this fractal here. So my charts are yeah, closing above here would be positive. It's a 55 RSI MACD. Yeah, you know, MACD looks like it's crossing. We're to 55 RSI. It was strong volume today. There were sellers up here. So probably the right thing to do here is, you know, whenever you're a little torn and it does look good to you, but not like the best, usually I like to take a half position. So I think what I'm going to do is I'm going to take a half position in bonds here. Because we are above all the moving averages. We did trigger that. MACD went positive and some volume. So we'll see what happens there.
Order filled.
Boy, looks like I hit another profit target on VIX. Yeah, VIX is going crazy. See how I hit the second profit target on VIX here? Okay. All right, so that's 2 profit targets on VIX. That helps. That's nice. Okay, so we were back on oil. Yeah, I don't, you know, if we triggered this V1 here, it might be a possibility. But let's take a look at our current positions now, because it looks like some damage is being done, and more important to get out of the things that are not going our way than to get in more stuff. So if Etsy were to close below here today, I am definitely going to pull the trigger and get out of everything of that position. Let's take a look here. Oh boy. Okay, so in these last 10 minutes here, I get busy with things, so I'm not going to be able to speak as much. Okay, so hang with me. If you can think of any questions, write them down, and after the market closes, we will get right to them. So let me go ahead and make sure I'm getting out of what I need to. And getting into what I need to. Okay. So because of time, I am going to start and move out of the positions that I have. It looks like very likely it is going to close below, and I have a lot to do. So right here, I'm going to get out of Etsy.
Order partially filled.
Intel.
Order filled.
Looks like it's closing below. So I do trade several accounts. So I'm going to have to do this in several accounts. So please hang with me. Okay. Intel, that still could come back. Merck is fine. We look at SPY. Boy, did we get out of the right place on SPY, huh? VIX is really moving up. We might hit three profit targets on VIX today. Okay. All right, we have 5 minutes. Okay, we're out there. Now, what else do we have to look at? Now, certainly looks like XTN. We're going to have to get out of that. You know, it's always hard to lock in losses, but
Order partially filled.
once you do,
Order filled.
you usually forget about them. And, you know, it's good for you also that you follow your rules. You know, it didn't work out money-wise, but at the very least, you followed your rules. And over the long run, in order to make money, you really do have to follow your rules. Okay, so we got rid of XTN. We are down to having to make a decision on Intel, which at the moment looks like it is going to close below the bonds. Let's take a look here. Yeah, I think I'm going to let the bonds go. I don't think I'm going to buy anything today whatsoever, except for the SPY. So we are out of Etsy. Intel's going to be really close. Merck is fine. VIX is doing well. XTN we are out of. Okay, waiting for Altria to go up. Okay, so I think what I'm going to do, we have 3 minutes. I'm going to go ahead and I'm going to buy my SPY position.
Order filled.
Okay. And then in the other accounts, I need to buy the SPY position again. We have about 2 minutes. Okay, SPY is purchased. Etsy is gone. So our real tough one here is going to be Intel. That one's going to be on the bubble at a close below the 30 RSI. So I have to get that queued up. Okay. So we're out of everything, right? We're out of Etsy. We're waiting on Intel. Merck is fine. SPY, we did buy that just a few minutes ago. VIX is very strong now. You can see that it's had a big. This is a bullish engulfing. Okay. All right, so we've got exactly 1 minute. So Intel 2970 does not look very good. All right, got 20 seconds. So you can see right down here it's 2973. So if it closes below 30, that's going to have to be my exit signal. It's going to get a little too close for me, so I'm just going to
Order
have to go
partially
ahead
filled.
and pull the trigger here
Order filled.
on Intel on both accounts. Okay, it is taken care of. Boy, what a nasty close. Really nasty close. Boy, the Dow's down 166
Order
points.
canceled.
Okay, that's it. Well,
Order
listen,
canceled.
it's a down day today, but at least we did. At least we did have some VIX, which ran up nicely, gave us a little bit of a hedge, up 3.86%. But Etsy, we did get out of Etsy for a loss, but not too bad, considering we did phase out up here. But at least we got out where we're supposed to. Intel did close below the 30 RSI. So you can see, from entry to exit was pretty small, right? I mean, we could have had a long way to the upside here. So a good example of a small loss compared to a possible good risk reward. Merck, we did keep. We did hit one profit target. SPY, we did end up buying the SPY at 292.02. So 292.02. But, I guess I want to point out we did buy here, we sold here, bought back again here. Lots better than just holding that down the whole way, right? So I'm grateful for that. XTN did go against us. So right now we have Merck, we have SPY, and we have VIX, and that is it. So we're getting close to being pretty flat. So let's take a look and see if anyone has any questions today. I do want to point out that I do offer private one-on-one coaching at nighttime via Skype. So if you feel like that could benefit you, my contact information, my email, my hourly rates are in the description. So if that's of interest, please reach out to me. Let's see. Okay, so Dr. Jorgen says, what do you mean by distribution? So distribution is, stocks are either in accumulation mode or they're in distribution mode. And accumulation mode is when stocks are moving higher and higher and higher. Let me see if I can get a better picture of this here. When stocks are moving higher and people are accumulating them on the way up. And accumulation is usually identified by higher highs, lower lows, higher highs, lower lows. When you start getting into distribution, that's the same. That means people are selling into any rallies, like here on Apple. Every time we have a rally, it gets sold into. We make a lower low, now we make a lower high, it gets sold into. So every time it rallies, it gets sold into. That is what distribution is. But accumulation, on the other hand, is the opposite when you have higher highs, lower lows, higher highs, lower lows. In that sense, every time it sells off, people are buying the dip. So in accumulation, people buy the dip, and in distribution, people sell the rip or sell the rally. Does that make sense? Okay, William says, if you had to decide between a moving average or the RSI as a stop, which one would you prefer to use or holds more weight? Well, that's a really good question, William. The ideal answer is that they both line up. You have a RSI of a 50 and you have a 50-day moving average, and they both line up together. Then you have doubly as strong confirmation. But if I had to choose one, I would have to say I would go with the moving average. And the bigger the moving average, the better. A 200-day holds more weight than a 10-day moving average. So yeah, if I had to choose between one, I would use the moving average, and the longer term moving average, the better than just the RSI. But the real correct answer is if you can get both of those to line up, like Intel, you have a 30 RSI and a 100-day moving average at the same time, or you get something that has a 30 RSI at the same time, it lines up with a 200-day moving average. that's the best. So, but to answer your question, I would go with the major. I would go with the major moving average would hold more weight. Does that make sense, William? Okay, well, let's look at the wrap up. See where we ended. Yeah, the Dow down 162, NASDAQ down 45, and the S&P down 22. So this was a big reversal day, in my opinion, folks. People were just kind of waiting and waiting to see how long or how much further the market could go up. But today was a big move down. After news from the Fed and so forth. So, be careful. Be careful with your positions. Always remember to take proper position size. Don't try to buy too large, and wait for your signals to come. I mean, the only thing you have any control over at all in this game is how much of something you buy and where you buy it. That's the only control you have. You can't make it go up. You can't make it go sideways. You can't make it go down. So the only thing you have control of is how many shares you buy and how far you let a loss run against you. But those are important. Those are important abilities to have, right? And so that's what's going to make the difference between being a long-term profitable trader or not. So, good, William, I'm glad. What else we say here? Do you always wait till the end of the day to close your position, even though your stops are being tested intraday? For example, your stop is 50, but during the day it drops to 48. Yes, I do try to base everything upon a closing price, William, because I feel like the closing price is the most valid price of the day. So yeah, I don't do it intraday because intraday there's a lot of noise and it doesn't mean as much to me if it's under the 50 during the day as whether or not it's under 50 at the end of the day. I hope that makes sense. And I base all my trading upon that. Sometimes when there's 10 minutes to go and I have a lot to do, I can't wait till the last second like I'd like to because I have 3 or 4 positions that I have to work with. But you do the best you can. But yeah, I mean, if it happened with an hour and a half to go, no, I would wait it out until the end of the day. Oh, those are good questions, William. All right, does anyone else have any other questions? Or William, if you have any more, please let me know. Okay. Well, it was a red day today. It was a tough day, but we did follow our rules, and that's what's most important. I'm really glad that we had some VIX on the upside. Really glad. That really did help mitigate a lot of the losses, or some of the losses. So, okay. Well, listen, if you enjoyed this podcast, is it a podcast? All these things, live streams, podcasts. But if you enjoyed today's program, I'd appreciate it if you could give me a thumbs up. And, if you found it helpful, share it with a friend or let people know about it. And let's kind of try to build this community every day and, make us all better traders. So, all right, on the way out, I'm going to have to play the U.S. government required disclaimer again. So I hope you enjoy that. And I hope to see you, everyone, again tomorrow. Tomorrow is going to be Thursday during the last hour of the market. So, okay, have a good day, everybody, and hope to see you tomorrow. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.